All right, guys, welcome to our next mini seminar here. We're going to talk about futures and using them to play ETFs. I'm just going to give people another minute to join, maybe another 2 minutes. If you want to follow along, if you have a smartphone, I'm going to use the free app called Stocks Tracker. Well, the free version of the app, Stocks Tracker. There's a $10 version, but you don't need it. I'm going to use that to look at futures. And then I'm going to use Stocks Live to look at my different charts. And we might actually use Thinkorswim instead, since everyone has that. So if you want to get the Stocks Tracker app, it's free. Don't pay for the $10 one. We're just going to use the futures button there. And I'll be showing it on my screen. So there's no need. If you don't want to get it, do not. You can just see what it's all about on my screen here. I'll give people one more minute to join. Start a minute late. So this is Stocks Tracker. And this is what the app looks like. That one. Top right. Orange box, green chart. And let's just see what we got. There's enough of us. We can start now. All right, I'm recording this too, so I will. I actually recorded at the start instead of 20 minutes before we started. So this one I'll actually be able to share just today without having to figure out how to edit it. So as I said just a minute ago, welcome to the seminar on using futures to figure out which ETFs are going to be in play. And for me, ETFs I'm looking at are high risk. So I like the 3 times leverage ones. I like ones that have call options and put options associated with them. There's some that don't. Basically, I like to go crazy with my risk, but that's just how I am. So I want to start by saying I use this app here, Stocks Tracker, right there. I use the free version of it to check futures at least twice a day, probably. I check them in the morning when I wake up just to see where they're at. And I check them at night before I go to sleep to see where we're headed. Futures are the now. It's not predicting the future or anything like that. It's right now. What are the Dow futures trading at? What are the S&P futures trading at? What are the NASDAQ futures trading at? Et cetera, et cetera. There are futures for everything. And those futures dictate a lot of these ETFs because they're tied to them. So for example, if we were in the morning, let's pretend it was 4 in the morning Eastern time. So the markets had just opened and we saw this exact picture here. We could go down and say, oh, Dow futures up 2.5%, 2.1%. So we're probably looking at a bullish day on all ETFs. So inverse ETFs are out of the picture as far as Dow goes. Really, if you look down here, the only inverse ETF that would be worth playing would be one if you could find an oil inverse ETF, which I used to have DWT and UWT were my 2 oil short and long plays, but I know they don't exist anymore. I know NRGU is a popular one these days, and so I would assume NRGL would be the opposite of that. I haven't actually looked it up, but you would play the short side if it was red, and you would play the long side if it was green. NASDAQ, that's the QQQ. So you have TQQQ, which is long the NASDAQ, and you have SQQQ, which is short the NASDAQ. So that ties with the NASDAQ directly. I believe they're triple leveraged unless they changed just recently to double leveraged like some of the others did, but I'm fairly certain they're still triple leveraged. We also have here the S&P 500 VIX. That's going to directly correlate with TVIX. TVIX should be approximately 2 times that. So if we woke up in the morning and the VIX was saying minus 1.84, we would expect to see TVIX at minus 3.2-ish, 3%. And the point with that, by the way, is if it's not, you might be able to take advantage of whatever's going on. So a lot of times, let's say the market crashes overnight and tomorrow we wake up and the VIX is up 5%. So that would correlate with TVIX being up 10%. If you wake up at 4 in the morning and TVIX is not up 10% while the VIX is up 5%, then there's the difference that you could really stand to try to scalp. Market makers don't have an obligation until close to get it within a certain percentage of the net asset value. And in the morning, especially pre-market, it seems like it's either they're asleep at the wheel, or perhaps they are manipulating, or maybe they're trying to take advantage of a big price increase and they're trying to say, hey, take it for a little bit less than you really should. But whatever the reason is, if you're up at 4 a.m., sometimes you can just check and make sure that these things are calculated correctly. And if they're wrong, you can try to make the difference up. With TVIX, one of my favorite things to do is if TVIX is up and I'm trying to question, okay, it doesn't look like it's up as far as it should be based on VIX futures, look at UVXY, because UVXY and TVIX, UVXY should always be up less than TVIX. It shouldn't switch. So UVXY is a tamer version of TVIX. And if they're very, very close, you can expect probably TVIX goes up or UVXY goes down. One of the two is going to move quite a bit. And if the futures are up, the VIX futures are up, which means market futures are down, you would expect the TVIX to increase and UVXY to stay similar. So TVIX and UVXY are there. The opposite of UVXY is SDXY. And that is, if TVIX is long the VIX, that is technically short the VIX, but it's a really roundabout way of going about it, because the VIX is quasi playing S&P futures contracts. So it's all in a sort of a sense, they're all connected to S&P futures contracts. It's a really roundabout way, and you can read about it on the prospectus online if you really want to get into some drab reading. So then we go through here, and the big one that I look for here is the China A50, because there's the low float Chinese tickers. When they run so hard. So I look for the China A50 future a lot too. And you can do yin and yang for China 350 for the China A50. It's not directly connected to that the A50, but it's connected to Chinese markets overall. So yin and yang are short 3 times leveraged Chinese markets, and they're pretty common tools. I believe they might even have options, so there could be a way of really playing those. But if I see the China A50 way up, like 2-3% or more, I probably wouldn't even look at ETFs. I would be looking at the low float Chinese tickers that we all know and love, like Craig and CIFS and all those guys. So gold futures, that they directly correlate with UGLD, which is U gold 3 times leveraged to the price of gold. And that's a little bit different from a lot of the ones we see people talk about, like JNUG and Nugget and UGT, because those are leveraged 3 times to the price of gold miners, which are highly, highly correlated with the price of gold. But there can be hiccups. There can be things that happen in the mining industry that maybe don't affect the price of gold as much. And so you would want to pay attention to that. But if you were to see gold up plus 0.4% tomorrow morning when we woke up, you would expect to see UGLD up around 1.2%. And if it wasn't, you could take advantage of that. Silver, by the way, I'm sure you've heard me say this if you've listened to any of these before, silver is more volatile than gold during inflation. So silver up so much more than gold today. It's surprising how much, but it doesn't really surprise me that it's up more, because it is more volatile. And you can play USLV, which is up silver, USLV 3 times leverage to the price of silver, or DSLV, down silver. And those are the two that I know of off the top of my head. There are many, many gold and silver ETFs. If you just type in a Google gold and silver ETFs, you can type in things like low fee. You could type in things like high leverage if you want more risk. There's all kinds of ways to go. Just use the right keyword to learn about those. And we'll go look at my futures list in a second. Platinum, I don't really play any futures or any ETFs with that. I'm not even sure if there is one. Oil, NRGU is the big one that I know of right now. USO is a good one. It's US oil, but I don't believe it's leveraged. NRGU is actually supposed to be large cap oil tickers in the US, and they do. It seems to be less connected to the price of oil than the gold and JNUG. JNUG is pretty connected to the price of gold, but I've noticed that the NRGU can be a little bit different than the crude changes. So you can't look at the crude and say, oh, it's down 4%, so NRGU should be down X percent. It's not quite like that. It would be about 12, but it's not about the price of gas. It's actually about the price of these oil tickers, which if they were super oversold and the price of oil went down, but it was still profitable for some, you wouldn't see that kind of effect there. So USO, though, you would see the correlation exactly. Natural gas, minus 3.5%. If you woke up in the morning, 4 a.m., and you saw that natural gas was minus 3.5%, you would expect to see DGAZ up around 9%, 9 to 11.5%, somewhere in there. And you would expect to see UGAZ down the exact same amount. UGAZ is up natural gas. It's 3 times leveraged bullish. And DGAZ is 3 times leveraged to be bearish natural gas. So you can look at that, and tomorrow morning, I mean, if this were to happen and it was tomorrow morning, you could look at that and say, okay, DGAZ better be up 9% or so. If it's not, if it's only up 6%, there might be some room for you to try to sneak in and scalp that. From there, I don't really play heating oil, London gas oil. I've never looked for things like that. I once did look for corn. There is a corn ETF, but boy, is it boring. I think it's just CORN. And it doesn't seem like it's a whole lot of fun, and I don't use those. So those are the futures that I look at, and I always take a peek at my ETFs. I have mostly the bearish ETFs saved because those are the ones that I play. When the ETFs are bullish, I'm playing longs. I'm not really playing ETFs, but when the market's tanking, I'm playing the inverse ETFs because they are the easiest ones to pick. It's so looking at this now, this is after hours. Let's go ahead and turn off after hours so we can see what the effect of the day was. Earlier today, Fang Down was way up. It's Fang Down quite a bit. So DGAZ up 8.5%, 8.8% during regular hours. Let's see where it went after hours. DGAZ, it's up another little bit. You would have expected a little bit more of a move, but there's a weird effect with what time the futures close of natural gas and what time you guys and D guys close. It's a weird one. I can't remember that, but there is a weird effect that has. So it's not going to be exact, but this does look like it didn't quite go up as much as maybe it should have. They will post their net asset value. I want to say by now. I think they would have posted by now. It might be another 20 minutes before they post it, but they post it, I believe, before after hours closes, and then you'll see a little bit of an adjustment. Market makers' job there is to provide liquidity, provide demand to move the price within a couple percent, 1% of the net asset value, and then they actually have to post how far off it is. So the net asset value is X, the price is this, the surplus or the downside is X, and they'll actually post all that stuff online on their website. It's actually not, I would argue it's not very manipulated by that point because they're very upfront about all the information. Some of the information might not please you to find out that they can do what they're doing, like the fees they charge and all that, but it's there. So fairness is a different question from manipulation. So these are the ones that I look at, and these are the inverse ones that I look at, and especially like TVIX. I like to watch that. FAZ is short financials, which I'm always watching FAZ because the next bank crisis is surely going to result in FAZ exploding. I wish it had existed when Lehman Brothers went down in 2008 because that would have made a lot of people a lot of money. But FAZ in the meantime, those guys have gotten themselves on the side of the bankers, of course, are on the side of politicians, and they've managed to weather this recession quite well with all the services they needed to provide. So FAZ has been falling, but that's this one here. That's inverse financials. You can look at that, 3 times financials. SQQQ, that's the NASDAQ QQQ. And obviously it's down quite a bit over the last day. But it's one that's always worth watching if the market starts to sell off. Let's see here. What's the next one that's fun? SOXS is semiconductors, and you can go short or long. I'm trying to find it now. I just type it in. We'll find it this way. SOXS. That's semiconductor short at 3 times leverage. You can always go SOXL if you believe in that. Awfully close to a 52-week low. That a lot of that is the effect of fees. They do take fees out, but of the net asset value, not of your account. They take it out of the actual ETF price, stock price. But it's also a sign that, okay, right now, in this moment in time, semiconductor traders are less fearful than they've ever been in their entire lives, or in this entire year. This is the least amount of fear, the most amount of bullishness they've experienced this year. And that seems a little bit, I don't know, a little far-fetched to me. So I look at this chart and I wonder, when is it going to turn around and maybe do a little run for us? And this is definitely one of my favorites right now, just because it is cheap. These ETFs, inverse and otherwise, they reverse split all the time. So cheap is a valuation word. It's not necessarily the word that I should use, but when TVIX reverse split to 40 and then ran to 1,000, even though it will move based on how the market's doing, not based on its price, it's hard to buy it, over $150 still. So I like SOXS. I like Fang Down. Fang Down, by the way, FNGD. That's the one wiggling in the middle of my page. That is inverse Fang stocks at a 3 times leverage. It's Canadian. And the next one that is worth writing down if you're doing that would be TECS, which is technology short. It's the same as SOX, but it's here it is. It's technology. And then Lab Down, that had a big day, if I remember right. Had a big midday. Oh, wow. So it really fell over the course of the day. It was way up earlier, and it looked like biotech was finally going to be selling off. But then, boy, it ended the day real strong. So this is one that, I'm going to be watching real close because it's trading near the year low. Of course, it's going to reverse split, but even when it reverse splits, it's only rebalancing. It's still the value of the fund is still going to be expressed exactly the same. And it's not like a stock where after a reverse split, there's like downside room just because of the reverse split. The downside room only will exist if S&P biotech companies go up, then Lab Down will go down. Otherwise, if biotech companies drop one day, it doesn't matter what's happened, reverse split, regular, doesn't matter, this goes up. So I'm going to be watching this closely for anytime this finally hits. It could be very short-lived. If you look at the 5-year, this is the effect of those fees. It just drops, forever, basically. So any spike is worth shorting, is what they say. I haven't done that yet, but all right. So those are the ETFs I look at, especially the inverses. Here's the futures once again, stocks tracker. There's plenty of places to find futures. I feel like I've seen this one posted on StockTwits, a bunch of times. I just like how simple it looks. I didn't pick those. They picked them for me, but they give me a nice overall picture of what's going on. And yeah, so I'll check questions. If you have any, send them. If you don't, that's great. I'm just going to look at the chat here. I hope you could hear me that whole time. I'll find out when the video is sent to me. And if you have no questions, that's cool too. I'll give you just a minute. Do not feel obligated to send a question, but if you have one, I'm happy to answer. Yeah, that's my presentation. Why do you enter inverse so soon? I don't understand the question. I suppose what do you mean so soon? I can tell you why I enter an inverse, but I would have waited to buy FAS. Yeah, I was early on FAS. I did FAS because I expected there to be, I expected the news about the coronavirus increases to overtake the news about the economy opening. And I also didn't actually think about the effect of all the PPP loans. When they go out, the banks were making money from that. And I didn't think about that, oh yeah, the banks have probably created a system where even if the economy is struggling, the services needed by the banks are so important that they're making money. So yeah, I actually I ended up getting stopped out of FAS and I put my money in Fang Down. And what does the scanner scan that comes with the book? That's the textbook swing scanner. It scans for the most strict of anyone who reads the book. You would go into this and you would get this scanner for free. And it's basically looking for very strict requirements. Everything that's in the book, so PPS, Williams percent R, MACD, accumulation distribution, TTM trend, TTM wave, Bollinger Bands. What else is relative volume is not there. Random walk. So all those technicals that are in the book, this is scanning for the exact moment that they've all gone bullish, both on the 20-day 1 hour and the 3-day 15-minute. So we can actually look at these and see how that's been playing out. So 20-day 1 hour, we have a situation where, we don't have the trend written in this one. It must be in the 15s. So we have the PPS and TTM scalper in agreement. They're within 5 candles of each other, and then they're both pointing up without a down point in between, gray. We have the Williams percent R over -50. We have the MACD and a bullish cross. TTM wave is over 0, and the Bollinger Bands are relatively tight. TPM level is not in the scanner. Random walk is red over green. Chaikin's over 0. RSI is not over 70. So that's what we're looking for. And then if we zoom into the 15-minute, I'm assuming we're going to see some blue TTM trends. Yes, indeed. So this has a TTM trends, multiple blue in a row. PPS and TTM scalper there, gray and green. Williams over -50. MACD in a bullish spread, maybe curling down. So in this moment, you'd want to just check the 5-minute. There could be an entry more at 54 cents worth waiting for, but red over green. So you have everything that the scanner, that the textbook talks about is optimal, and the scanner purposely is looking for the 1 hour and the 15-minute, because that is super hard to do. No matter how skilled you are, myself included, it is so much easier when a scanner is just getting them all for you. But it's, by the way, if you do have the scanner, it's worth checking. You want to make sure. This is a situation where the volume is too low to really trust the 15-minute. So let's look at the 20-day 1 hour and see what we got. Quite a squeeze setup. Everything is bullish, but for me, that would be hard. TTM wave is over 0, but just barely. I'd keep my eye on this for a break, 65 cents maybe. But yeah, so this is the textbook swing scanner, and like I said, it's just looking for the best technicals on the 20-day 1 hour and the 15-minute. CNBC's app has the same features on it in the same format. I wonder if it's just a third party then. Did you have an inverse ETF on your list that shorts real estate? You know what? I thought I did a long time ago. I thought I did, but I mean, it's been so long since I ever thought about it that I don't remember it. Real estate? No, the space isn't going to work. Real estate. So here's REM. This is long real estate. Wow, interesting. You may have found something here, but I would assume that REM, there must be some sort of, it doesn't have to have a sister trade that's opposite, but I would just type it into Google and find it. Let me check the questions here. JPM, BAC are rocketing these days. Yeah, they are. Yeah, it's because they're making all that money from the actual downturn. I definitely screwed up the FAZ. I was trying to play inverses, just a wide group. I picked FNGD and FAZ the same day. Usually I play SOXS along with those. FAZ is just I expect a bank downturn eventually. FAZ got me. FNGD was moving up quite a bit, and the rest of the inverses are actually moving up quite a bit too. So the inverse plays were all great. It was just the FAZ was the poor one. How long do you hold an inverse leverage ETF? Okay, very short. They do suffer from decay, big time. That's that year chart if you saw. That was both the long and the short eat up those fees. The fees look like they're small in the prospectus. You think you look at that's so bad, but they take them out daily. It's literally every single day it comes out of the net asset value. So in a single day you don't even notice it, but over the course of a year, 2 years, 3 years, it just keeps dropping, holding all else equal. So for me, you don't invest in an ETF, in a leverage ETF at all. It's a short-term trade. For an inverse one, I'm trying to predict the news. Ideally, I'm reading the news and just trying to think to myself, okay, what's the most likely story to come tomorrow or the next day or the weekend? Is it more likely to be, like right now? I'm thinking, when is the news going to shift from economies growing and opening up and everything's great to we're worried about virus transmissions and some economies might have to shut down. Like, when does that news switch? And if I can guess the right, afternoon, I would get in the inverses before the day of the news actually came. And that's my hope and goal with the inverses is to maybe play it for 2-3 days tops based on news. And that's that. Do you ever play TQQQ, SOXL, TECL? I notice you prefer the inverse. Yeah, I prefer the inverse because when the longs are actually going, I play a lot of very risky low float tickers, and those are the ones that run the hardest when the markets are exploding. So when the markets are moving up, you have all the ETFs are going to be moving up, and all the, a good majority of the tickers are going to be moving up. So it's a lot easier to play the tickers. But when the market's crashing, it is very difficult to pick the ticker that bucks the trend, right? But it's a lot easier to go, oh, the market's crashing, here's the 10, 15 inverse ETFs that I follow. Pick the one that's hasn't really run yet, or the one that's got the best technicals. By the way, intraday, the technicals work really well with inverse ETFs. Day to day, overnight, news will win. Every time news beats technicals. But intraday, the technicals are very reliable. Non-inverse leveraged ETF holding max a week. I mean, no, because we've seen DGAZ. Oh, that's inverse, I guess. So let's try to think of an example. We've seen LABU do great things this year for much longer than a week, right? That there's inherent risk that continues to be added, but eventually that fee is definitely going to work. But you can have a trend like biotech shares going up for a month or two at a time. That can last. Like I just said, though, I personally don't play the long ETFs. I usually, when the ETFs that are long are moving up, I'm playing all the tickers and trying to pick the ones that are more volatile than those. All right. Feels like we're at a good closing point for this. Friday is going to be a lot of fun. On Friday, I'm going to just go through some newsletter research picks. Obviously, we don't know on Friday what's going to make the newsletter for sure, because that is a team effort. But on Friday, I do have my short list generated for what I plan on sending out to all the researchers that help. And so we'll look at some of those charts together. It'll be a lot of fun, and we'll do it at 4:30 Eastern during the pre-markets, or during the after hours. So hypothetically, if you wanted to make an entry after that study session, you could. Although, like I tell everybody, don't be the reason the technicals go bullish. You have to get in sneaky, so it's hard to do after hours. But I'm looking forward to that, and I'll see you guys then. Thanks, everyone.